Well, hello, friends, and welcome to today's live level up conversation. Whether you're joining me live or catching me on replay, happy Wednesday. Let's get started.
Welcome to Level Up with Winnie Sun. Award-winning financial pro. Get ready. Level Up with Winnie Sun.
Hello, and welcome to the show. I hope you have been having a great week. It's been a busy one over here, certainly. And actually, I'm here in Southern California, and it's actually a rainy day as well. So jump in, let me know how your day is going. For those of you who are brand new to the show, I'm Winnie, your host and award-winning financial pro, a Forbes contributor, and a CNBC council member and contributor. And of course, I'm hoping you're having a great week. We are definitely busy times, right? Crazy times. You can't believe how quickly 2025 is already moving. Let's talk about the market. Currently, the Dow is down 202 points. Nasdaq's up 21 though, so we'll take it. S&P 500 is down 13 as well. Now, some of the news coming out, of course, we're all sort of paying attention to what's happening in the grocery stores. Now, a lot of us have been talking about tariffs. We know we're in tax season, but something that continues to play havoc on our bottom line is, of course, inflation. Now, there's been a lot of talk about where inflation's supposed to be, right? We had a lot of high expectations on January 20th. Whether or not that has come true, well, only you can be the judge of that. Now, on Yahoo Finance today, they actually reported about inflation. Inflation rose actually more than expected last month, with the consumer price index, CPI, up 3% year over year. That's not a number that we want to see. Now, this is an increase from December's 2.9%. So the monthly CPI jumped about 0.5%, which put in perspective is the biggest increase since August of 2023, even surpassing many forecasts from various economists as well. Now, one thing that you may have noticed, and if you haven't, I'm actually a little surprised. I've been seeing a lot of tweets about this on X and different platforms. Well, the prices of eggs have certainly skyrocketed. Now, I know some people have been sharing pictures of their eggs in their local supermarkets saying that it hasn't risen as much in your neighborhood. And if that's the case, then that's great. But unfortunately, that's not the case nationwide. In fact, egg prices have soared over 15% last month alone, contributing to a 53% year over year spike in the price of eggs. Now, this has been the biggest increase since June of 2015. If you've gone to your local breakfast restaurant recently, some places have even started putting an egg premium onto the menu. So things are definitely costing more. Core inflation, excluding food and gas, rose 3.3% annually, up from 3.2% as well. But don't forget, December was driven largely by shelter, insurance, and medical costs. And given what we've seen across the country, different parts of the country, such as here in Southern California with the wildfires, and we're obviously going into very cold weather, so you're seeing more expenses in different pockets of the U.S. So definitely, it doesn't seem like things are getting any cheaper anytime soon. In fact, even the prices of used cars have surged for the fourth straight month. Now, Fed officials are warning of a very bumpy road ahead as inflation remains definitely above the 2% target, making future rate cuts uncertain. Economists are also noting that January's inflation data, of course, is often volatile, but the unexpected, rise raises, of course, concerns about what is our Fed going to do next. And that kind of takes me to the next article that I want to share. This was shared on Bloomberg. Stephen Dennis talks about, of course, Jerome Powell, Fed Chairman Jerome Powell's recent testimony in front of the Senate. Now, this is what he said so far, and I think you have to really pay attention to his words because this gives us an indication of what's going to happen into the future. And by the way, before I jump into that, a huge welcome to Patrick Jervis Jr. It is wonderful to see you. Long time no see, my friend. Thank you so much for making the time. And of course, Joshua, CrossX Fighter, thank you so much for joining on YouTube Live. Always a treat to see you joining us here live as well. All right, back to the story though. Let's talk about Fed Chairman Jerome Powell. Powell has reiterated that after last year's rate cuts, that the Fed is definitely paying attention. In fact, policy is now significantly less restrictive, they said, and that they said there's no urgency to adjust rates further. Now, this should be seen as, possibly some good news. But he does says there continue to be deficit concerns. In fact, he's urging lawmakers to start addressing the U.S.'s budget deficit now, which aligns with a lot of the fiscal conservatives who debate whether to prioritize tax cuts or deficit reduction. Now, it's important to know that one section that a lot of Americans are sort of watching and some are very concerned about is the CFPB. Now, there's been a lot of talk about whether shutting this down was a good thing or a bad thing. In fact, a lot of people were criticizing whether the new administration's decision to shut down the Consumer Financial Protection Bureau was actually a good thing. In fact, Fed Chairman Jerome Powell acknowledged its unique role in regulating large banks as well. But Jerome Powell also talked about the importance of defending federal staff, saying that in the Fed, they're actually more overworked rather than overstaffed. So, responding very quickly to Doge's initiative of sort of breaking things, getting rid of things, and then adding them back in later, saying you don't really want to do that when it pertains to the Fed because they're already overstretched as it is. But there continue to be discussions about tariffs and inflation. Now, according to the Fed chairman, of course, he's been very careful about avoiding political discussions, but he did note that tariffs could put some upward pressure on inflation, but really that it's really too early to assess their full impact. But he says he's committed to revising Fed guidelines on reputational risk in response to many concerns coming out of the federal government, ensuring that the Fed wants to remain neutral in financial decisions overall. So I think it's pretty much a wait to see situation once again. But I think he's made it very clear, don't let anybody on my team off because we're working really hard. But that being said, you keep on doing the tariffs and that might be impacting inflation. So wait and see. Wait and see once again. And speaking of that, this is something I really want to ask all of you about. Do me a favor. If you're joining me live right now or on replay, put in comments. What do you think about the talk of getting rid of the US penny? Like the idea or don't like the idea? If you like the idea, go in comments and just drop a thumbs up or a check arrow, whatever. If you don't like the idea, you can put in nah or thumbs down. Let us know how you feel about the US penny. Like it? Don't like it? Do you think the pennies are going to be worth more now because they're no longer circulating? I don't know. But this is being shared in the New York Times, talking about how President Donald Trump has announced that he has ordered the Treasury Secretary to officially stop minting pennies, calling them an unnecessary expense. Now, it costs money to actually produce a penny, believe it or not. So to produce one penny, it costs 3.69 cents to produce, meaning that each penny represents a 2.69% loss for the federal government. Now, the U.S. Mint issues billions of pennies annually, costing taxpayers about $85.3 million per year. Now, countries such as Canada, Australia, Sweden, and even New Zealand have completely eliminated these lower value coins without major economic disruption. Now, critics are, of course, saying that this is a bad idea. You shouldn't eliminate pennies because this could increase demand for nickels, which costs 13.78 cents each to make. It just sounds like these coins are not a very efficient way of doing business. But some believe that this move could actually act as a hidden tax, as prices ending in 99 cents would not be rounded up. Now, Congress, not the Treasury or the president, has the final authority over coin production. So it really depends on the Congress, which makes Trump's order once again, is this legal or is it not legal that Trump said no more pennies? Now, despite economic logic, public sentimentality, it does seem that a lot of people don't really want to get rid of the penny. So I'm curious to see how you feel. Like the penny, don't like the penny, put in comments. We want to hear from you. Now, let's continue on. Like talking about the federal government, we really can't talk about the federal government without talking about the president, and we can't really talk about the president without talking about his new BFF, which is the one and only Elon Musk. Now, of course, you know that Elon is and his team are working very hard to get rid of some government waste and extra expenses, trying to help get the federal deficit down. But that being said, there's been a lot of criticism of like on both sides. People say he's saying and his team is saying like we're being very, very transparent. We're talking to you, we're updating you. And on the flip side, people are saying, well, transparency means you also give us proof and not just talk. We don't know if there's no proof behind your words because maybe we don't trust you. Now, only you would know your feelings regarding the subject, but I didn't want to share with you something that's being reported from the New York Times. Get this, Elon Musk's confidential financial disclosures, that is becoming an ethical question. Theodore Schaefer and Eric Lipton at the New York Times shared that Elon Musk, serving as an unpaid special government employee under President Trump, will file a financial disclosure report, but it's going to be remain confidential. In fact, his vast business empire spanning from electric vehicles, Teslas, space exploration to SpaceX and AI creates unprecedented potential, they say, for conflicts of interest. Now, as a special government employee, though, Elon Musk is legally required to avoid actions that benefit him or his family unless granted an ethics waiver. Now, his companies have billions in federal contracts and face multiple regulatory investigations, making an ethics waiver, you know, probably likely. But that being said, Elon recently completed ethics training, and his staff is undergoing similar training under the White House Department of Government Efficiency program. But federal law mandates that the release of ethics waivers, um, but the White House has said that they haven't actually responded to requests for Musk's information, and former White House lawyers suggest no waiver may have been issued yet, as these typically are based on financial disclosures, which hasn't been disclosed yet. So the situation is kind of murky and kind of gooey and interesting, and all at the same time, the situation really raises transparency and concerns given Elon's extensive government dealings and regulatory scrutiny. Now, I'm going to guess that you have a very strong opinion about this, depending on what side of the aisle that you lean on. That being said, I think that we can all agree that transparency is a good thing and that the trustworthiness of anybody that is part of our government or extension or volunteer government is a good thing because we want to feel good about where our tax dollars are going and the people that represent us and our well-being and that of our families. So you let me know. Let me know what you think. Drop it in comments if you think this is a great idea, bad idea. It's good to share your opinion either way. Now let's continue on because I want to talk about AI. And this is really exciting. We've been talking about the second industrial revolution here. First was the internet, we have smartphones, and now AI. And unless you've been living under the rock, you know just how exciting AI is. In fact, many of us are using it on a day-to-day. I am for my business. I know my kids use it for schoolwork and everything else. But AI is definitely here to stay and it's just evolving. And now they're saying that AI agents could be coming for your industry. Now, that's not a surprise. We know that AI technology and development is making things faster, more efficient, and in some cases, when done correctly, maybe even more accurate. Now, this is an article being shared on Forbes by Bernard Marr talking about how autonomous AI agents are completely transforming business operations, capable of working 24/7, right, with minimal human intervention. Now, Early adopters include industries such as tech, telecom, e-commerce, logistics. They've already sort of gone all in on infrastructure and regulatory confidence there. But there still continues to be some slow adoption in other areas, probably some of the more highly regulated industries, such as finance, healthcare, and even manufacturing, as businesses are waiting for clear legal framework of can we do it? And if so, how is this allowed? In what ways, right? Now, of course, business case matters. Industries with clear financial benefits, cost savings, efficiency, customer experience are going to move a little bit faster, while government education might struggle to justify the return of investments on the cost of implementing AI into their workforce, into their series of operations. But the key is to be ready. Now, we do know that tech infrastructure is one challenge, but cultural readiness, which is the trust element, the skill element, and AI strategy is also equally important. So fields like law, media, government, now they may hesitate due to job placement fears or legacy systems, but nonetheless, AI is deemed to disrupt the status quo, creating new leaders while challenging traditional industry giants. And now businesses are prepared for a complete digital transformation, and how this will, and whether this will be an advantage. It really depends on how quickly you also embrace this technology. Now, I will say that as someone who works with businesses day in and day out, different levels of business managers and decision makers, I've seen a lot of people either number one, they're excited about it, but they're also kind of fearful about it. But I think by and large, many businesses skew one or two ways. Either they've all gone all in, they're trying to learn as much as they can about AI, or they're kind of sitting back and they're realizing this could be interesting, could be helpful, but they haven't even started yet. So let me know, like, if you run a business or even in your own life, if you don't run a business, how much impact has AI had on what you do every day so far? What on a scale of 1 to 10, how much of the activities that you do have been touched by AI? Have you thought about that? And if so, where do you think the opportunities lie for you and your industry? Definitely share in comments. We love to hear, of course, what industry and how big this is for you. I see Joshua saying keep the US penny. You know, I don't know. My kids have a lot of pennies at home. I think we'll keep them for now because seems like maybe our grandkids won't have a penny, so it'll be a memento that they can take a look at, maybe chuckle about in the future. I don't know. We'll see. Okay, let's continue on. Speaking of AI, well, we do know some positions are more easily replaced by AI currently, but we also know that AI has started to make already now a big impact in terms of layoffs. And that's certainly the case with a lot of technology companies. And Meta is doing just that. This is being reported by the Business Insider. Meta is cutting thousands of jobs. They're targeting about 5% of its workforce, about 4,000 employees just now alone, to prioritize AI investment and efficiency. In fact, CEO Mark Zuckerberg is focused on removing low performers, following a trend among a lot of tech companies like Microsoft, Amazon, Salesforce. And let's just be honest, even the US government, right? Letting go what they call low performers. Now, I will say this, I was reading a lot about this on social media, and I think this is sort of challenging for a lot of people, especially those who are being let go. So, from the federal government standpoint, from these technology companies, they're saying we're letting go low performers. Now, you're talking about in the U.S. government. I'm reading it could be hundreds of thousands of people out of work. Meta, 4,000 people. Now, if you're somebody looking to hire a new employee, and the government and Meta is saying that they're letting go of their low performers, are you going to be that excited to hire them? These low performers? And it's unfortunate because I've been seeing on social media, people are saying, like, I got a rave review of my performance just recently. So I am not a low performer, but you're letting me go for whatever reason. And now I'm looking to find another job. And my future employer might think I'm a low performer. And that doesn't really bode well for me. And so what does that mean? So one day you're working for Meta, the next day you'll be, I don't know, working very, very lower level work than you were, or earning lower level income than you were before because people are afraid to hire you. I don't know what the answer to that is, but I do think that's something to be thinking of, because it could be that the new employer has to do a longer probationary period of time or something like that, which is interesting too. But that being said, of course, um, letting people go does also mean that you're reducing your costs. And they're saying employees describe now at Meta a climate of fear. Some are even comparing the work environment to George Orwell's novel due to forced ranking and censorship. In fact, U.S. workers are going to receive about 16 weeks of severance pay plus 2 weeks per year of service. But some are worried that the career damage from being labeled underperformers is a big deal. So these job cuts are targeting employees with low performance ratings, with managers required to rank 12 to 50% of their employees in bottom categories. And so European employees in Germany, France, Italy, and the Netherlands are fortunately are exempt due to local labor laws. And will follow separate performance management processes. But Meta is saying they're reorganizing divisions, they're merging Facebook and Messenger, while they're also shifting Messenger's leadership to a generative AI group as well. So, that being said, crazy times, crazy times. Now, speaking of crazy times, last story for you is Sam Altman. If you didn't hear about this, this is a big thing. Elon Musk made an almost $100 billion offer for OpenAI. Okay, this is being reported by CNN. It's actually been on a lot of financial news, including CNBC. Now, Elon Musk supposedly offered $97.4 billion to buy OpenAI, but CEO Sam Altman said, no, 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 we're rejecting the bid, no deal, stating that the company is absolutely not for sale. In fact, Sam Altman believes that Musk's offer is just an attempt to slow OpenAI down rather than a genuine business move. Now, it's no surprise because the two of them have had a long standing rivalry. In fact, Elon has previously sued OpenAI, I think more than one time, even claiming that it strayed from its nonprofit mission. OpenAI, of course, operates under a nonprofit structure, but its for-profit subsidiary has skyrocketed in value, raising questions about governance and commercialization of the technology. But yeah, they're not good friends, right? Patrick says so sad. I know it's so sad, but they're not good friends. Who knows what's going to happen to OpenAI? But that being said, there continues to be this feud. It's like what? It's like the hip hop artists having their feud, but it's these tech OpenAI guru AI technology geeky techies having their own own not just like private battles, but very much public battles, because all of these are happening on places such as X and other platforms like that. But that being said, let me know your thoughts on that. You like it, don't like it? Do you think OpenAI should sell for $100 billion? Do you even think that's a real legitimate, real offer? But that being said, let's sort of wait to see. And we got a lot more stories coming up. I wasn't able to get to all my stories today because we have a lot of financial news this week. But I'll definitely be back. And I hope that you're doing well. And of course, if you have any things that you see that I should be paying attention to, feel free to send me a direct message or send me a post or wherever you're joining me live from. And we'll try to take a look at that as well. Currently, the Dow is down 252 points. Nasdaq's up a little bit more, up 30 now. S&P 500 down 15. Thank you so much, my friends, for being a part of today's Level Up Live. Do me a favor, like and subscribe to stay updated on all the latest business headlines here that could impact your bottom line. With that, to catch full episodes of past few episodes of Blow Up with Winnie Sun, you can check out Amazon Fire, Samsung, LG, Roku, and of course, previous episodes also on NASDAQ. And with that, when sharing an episode online, thank you so much for tagging at Winnie Sun so I can see. I really appreciate everything that you've done. With that, be well, and I'll see you again very soon. Bye-bye now.